Hey there, welcome to my channel. It's me, the Mind Injector. In this video, we'll be discussing why you should consider buying Apple stock before the next bull market. So far this year, shares of Apple have been up 14%, outperforming the 4% return of the S&P 500 index. There are good reasons why Apple stock is leading the market higher in 2023. First of all, let's talk about the strong outlook for iPhone sales. Apple has seen steady growth over the past several years. Demand for the new iPhone 14 lineup has been strong, but sales were weighed down by supply shortages last quarter. However, improving supply in China is expected to drive more growth from Apple's best-selling product in the near term. A UBS analyst estimates that China's smartphone shipments in December were down 18% compared to a 30% increase in the same period in the previous year. But Apple's iPhone shipments in China outperformed the rest of the market, rising 88% in December over November's totals. This sets up an acceleration in iPhone revenue growth next quarter. Management is guiding for total revenue to be in line with the quarter ended in December. For iPhone specifically, Apple expects revenue to accelerate over the December quarter's year-over-year growth rate. Secondly, growing demand for apps and subscriptions is another reason to consider buying Apple stock. Apple services revenue rose just 6% year-over-year, compared to a robust 24% increase in the year-ago quarter. That might have disappointed some investors, but as we saw with iPhone, Apple is doing much better here than its headline number suggests. One of the largest drivers of Apple's service business is advertising, which makes up an estimated 60% of services revenue. Apple's services revenue came to $20.8 billion in the last quarter, which was better than management expected. In fact, App Store subscriptions grew by double-digit percentages, with revenue achieving all-time highs in cloud and payment services. Apple's growing installed base of devices, now over 2 billion, should become an increasingly important growth driver for the company, which is another catalyst for the stock. Finally, let's talk about optionality. The latest report had Apple unveiling its long-runner mixed reality headset in June at its annual developers conference. Other reports say Apple is deep into developing a self-driving car using its in-house chip design. Whatever is going on, Apple's annual research and development expense has more than doubled over the past 5 years to $27 billion. The company is investing in new products and services that may not even be reflected in its current valuation. One opportunity that is already contributing to a growing stream of revenue for Apple is advertising. Bank of America analyst estimates that if Apple monetizes ads outside the App Store, it could become a $20 billion business over the next 4 years, which would equal Apple's current quarterly revenue from services right now. To sum up, easing supply constraints on iPhone sales, growing demand for non-ad services, and the opportunities to introduce new revenue streams over time are key catalysts that can drive more growth for Apple and send the stock higher. While the stock isn't cheaply valued, at 25 times expected earnings this year, it's also not expensive. The stock's outperformance so far this year is giving investors an insight into how well Apple shares can perform as the business continues to grow over the next decade. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like this video, and leave a comment down below.